You are listening to I Am Refocused podcast with your host, Shemaya Reed. This podcast is designed to inspire you to live your purpose and regain your focus. Now, let's tune into today's podcast.
Hey, this is I Am Refocused podcast. Today we have an awesome show lineup for you. Once again, this show is all about leadership, community, and entrepreneurs, small business owners out there. We have a returning guest. His name's Paul Moore. He was on this show not too long ago, back in 2018 in October. Man, he has an awesome topic tonight. Today, we are definitely going to have you all educated on this topic, passive income in real estate business. And today, he's going to talk about how you can turn $100,000 investment into millions. And before we get right to that point, I just want to bring Mr. Moore on the show and ask, how are you doing, sir?
Hey, I'm doing great, Shemaya. Thank you for having me on again. It's really an honor.
Yes, sir. So we're really going to get educated tonight. So tell us about passive income in real estate. How does that work?
Well, Shemaya, I've been around the Bigger Pockets community. BiggerPockets.com is the world's largest real estate investors forum. And I've been around real estate investing for almost 2 decades. And I'm watching a lot of not only my friends, but lots and lots of people I interact with online who are watching shows. You know, like I was on HGTV about 10 years ago. And I can tell you that a lot of people watch HGTV, House Hunters, Chip and Joanna Gaines, and they say, hey, I can do that. And I'm not saying people can't do it. They can absolutely do it. But there are so many millions of people chasing fewer and fewer flip house deals that they're beating their head against the wall. They're spending their nights, evenings, weekends, and they're trying to, they're swinging hammers and they're working so hard. And it takes twice as long as people expect. It's twice as hard, and it's usually half as profitable. So I say to these people, why work harder than you need to make less than you could? Because there are lots of opportunities to passively invest in real estate without quitting your day job. And a lot of people just love real estate and they want to do it full time. That's great. But there are passive investment opportunities that are surprising and have tax efficiency that would really surprise people. And like you said, at the risk of sounding crazy, I can tell people how to turn $100,000 into several $1 million if they have the patience and the right partner that they invest with.
And when it comes to passive income, to someone who's a newbie and they don't even know where to start, what is the right step for someone who will be interested in doing something like this? Like, is there a starting point that they should be ready before they even consider?
Well, first of all, I think that people need to understand there's a big difference between residential real estate and commercial real estate. And, when I was young, I would look at these malls that were really very cool in the 70s. And then by the 90s, they were, half, shut down and, home to the DMV and, some of these big box stores that were renting out old Sears and all that. And I thought, man, I would hate to be a commercial real estate owner. I would hate to own some of these offices and these strip malls that just went south. But I didn't know. There's incredible power. And one of the reasons is it's possible to force appreciation. Okay? Now here's what I mean. If you invest in residential real estate, let's say you buy a $300,000 house in San Antonio, and you spend $200,000 or $300,000, making it incredibly beautiful. Let's say you fix it up, you do everything imaginable to the interior and the exterior, and you add on, and you spend like $600,000. Well, Shemaya, and most people know this, the value is based on the comps. And if all the other houses in the neighborhood are selling for $300,000, you're probably not going to get your $600,000 out of it because the value is based on the neighborhood. Does that make sense?
Mm-hmm.
real estate, residential real estate is that way, but commercial real estate is very different. Commercial real estate has a value formula, and it says that the value of the property is based on the net income divided by the rate of return. Okay, so it's the net operating income by what they call the cap rate. Now, the cap rate is also known as the capitalization rate, and that's the expected rate of return for that type of property in that market at that time. Now, capitalization rates, or this rate of return, used to be expected in about the 8 to 9 to even 10% range. But now, prices are so high that investors, when they're buying, and I've got friends who bought lots of multifamily in San Antonio, for example, they expect a cap rate or rate of return around 5, 6, or 7%. Okay? So, if the value is based on the net operating income divided by the cap rate, if you can increase the numerator, the net operating income, or compress or decrease the denominator, which is the cap rate, you can drive the value up and you can effectively force appreciation, okay? And so that's why commercial real estate is so powerful. There are things you can do to dramatically change the value of the asset, and even more so, change the value of the equity. In other words, the investor's return. Very powerful. If you want, I can get into an example or two.
Oh yes, definitely.
Okay. Now this is pretty crazy, and it's kind of hard to believe, but it's a real. It's close to a real example. I've changed a few of the facts to just to make it simple to understand. But suppose you bought a mobile home park for $5 million. Now, you'd probably borrow 60% of that. So a commercial operator who buys this mobile home park might get a loan for $3 million or 60%, and then they would put in $2 million in equity or cash. And so this $2 million investment is controlling a $5 million mobile home. Now, I know an operator who recently did this. We invested with this operator, in fact, and they went in, and the first thing they did is they said, okay, we're going to clean up this mobile home park. And if you've got a third or fourth or fifth or sixth car or boat or RV, you can't keep it there in front of your mobile home. And so we're going to build a special place for your extra stuff. And so they paved an acre of weeds over, and they put a nice fence around it, and they said, okay, if you've got extra cars, RVs, boat, whatever, you can put it in this area, and we're going to charge you a fee to do that. And so that's the first thing they did to clean up the mobile home park. The second thing they're doing now is they're saying to the neighborhood on Craigslist and etc., they're saying, hey, we've got boat and RV storage, because they paved a whole acre. That's a lot. And so now they're renting that out, and when it's fully rented up, Shemaiah, it'll be renting at about $10,000 a month. Well, that sounds pretty good, but it's better than that, because it only cost them $100,000 to pave and fence this area. So $100,000 invested, and they're actually able to rent it out for $10,000 a month, which is $120,000 a year. That's 120% annual return on investment. That's pretty good, but it's better than that. Because if you take the formula, remember our value formula, value is the income divided by the cap rate. Well, they just increased the income by $120,000. If you divide that by the average cap rate in that market, which is 6%, 120,000 divided by 0.06, that's about $2 million increased value. Well, that sounds really good. So they got a $5 million asset that they just increased to $7 million. That's a 40% increase in the asset value. But it's better than that, because the equity, well, there's only $2 million in equity. Remember, $3 million was debt. And so this $2 million equity just grew from $2 million to $4 million. It doubled. And so by making one, I won't say simple, but one fairly straightforward change, in the property, they were able to double the investor's appreciation. In other words, they were able to take a $100,000 investment and turn it into a value of $200,000 in a fairly short time. And that doesn't even include filling up all the other lots, raising the lot rent a little bit, adding covered parking and charging for that, adding sheds and charging for that. There's all kinds of other ways to raise income at a mobile home park. And so this is an example of forcing appreciation, and it's powerful. In commercial real estate, operators know how to do this. The problem is most people don't know how to get in on a $5 million deal like that. And that is an opportunity that a lot of syndicators, a lot of operators are now providing for investors who want to invest, as little as $25,000, $50,000, or $100,000.
Wow. And for the listener, maybe they're still like, oh man, that's a lot of information. I don't know where it starts still. What do you think about people who are into the Airbnb?
Man, I think Airbnb is an amazing opportunity. I'll tell you, I've got a friend in Sacramento who is teaching people how to take their vacant rooms, their apartments, their vacant spaces, and significantly increase their Airbnb profits, and actually with much less effort than most people would even imagine. And so I would recommend that people check that out. There are all kinds of Airbnb training courses out there now. He's got one of many, and it's really good stuff.
And would that be a good way to get your feet wet if you were new to real estate?
Absolutely. There's something called house hacking, where you rent out part of your house, or you buy a duplex. You live in half and you rent out the other half, and hopefully the other half pays your mortgage while you're sleeping. And that is another great way to go about getting involved in real estate, Shemaiah.
So someone listening right now, and they want more information. They want to know, is there courses, classes, training available out there? What would you recommend to them?
Well, there's all kinds of mentoring programs in the real estate investment world right now. And one of the mentoring programs I paid about $25,000 for my mentoring program. There's other programs that are, a few $1,000s. There's training you can get. You can go to biggerpockets.com and get all kinds of information about real estate investing. There are basically 7 or 8 paths we've identified to getting involved in this level of investing. But one of the best ways to start is get a mentor, or go on biggerpockets.com and learn all you can.
And when it comes back to what we're talking about, passive income, when someone starts, when can they expect to start seeing profit, as far as not just hitting the middle, but starting to see money coming back in their investment? What do you think the timeline average is out to?
Well, it really depends. I mean, there are some investments that they go like a ground up development. Apartment that's built from the ground up might take a year to get it approved, another 1.5 years to build it, and another 3 years to fully lease it up. And so that's a big risk, because who knows where the economy will be in, what is that, 4.5 years? 5 years. But there are other opportunities that are already cash flowing. You can invest in mobile home parks that are already cash flowing at, let's say, an 8% cap rate. So you might be able to get something like 6, 7, 8, 9% return on investment from that starting at day one.
And for the individual out there who, once again, they're interested in wanting to learn more information, what should be their first investment, and where should they look into investing?
I think we always say this, but it really is true. Your first investment should be in yourself, and that is learning all you can, and really, really dialing in on what you want to learn. Going, get a laser beam focus and to get all the information you can about that topic. If it's self-storage, go to Scott Myers. Scott Myers, Meyers. He's got a self-storage academy. He'll teach you all kinds of things. If it's, mobile home park investing, you can get a book by Jamie Smith. I think it's called Trailer Cash. Go check that out. There's all kinds of different things that you can do to to get educated. And then if you're going to invest passively, your most important step will be to find the perfect partner, to find the right investment partner, because you're going to be spending a lot of money. You really, really need to trust the person you're investing with. We are investing passively with a lot of operators. My company, Wellings Capital, spends a lot of time getting to know these operators and being really comfortable with them before we invest in their deals.
What has been some of the things that you've learned so far with your experience?
So one thing we learned is the importance of gut feel. You can lay out all the objective reasons, all the spreadsheets, all the potential profits and losses. But if you've got a funny feeling that something's wrong here, don't ignore that. It's so easy. And I think as men, it's easier. I think women are way more intuitive and way, smarter in a lot of ways about this. Their emotional IQ, I think, on average, is probably higher than men, and they pick up on little subtle things that men sometimes miss. I think for me, over the years, when I've made mistakes in that arena, it's been because of greed. Sometimes I've said, hey, this is a really, really good deal, and I've got this funny gut feeling that something's wrong, but I'm going to ignore that because, hey, how bad can it really go? And, that I ignore that little funny conscience thing or that little funny feeling I have. And often when I ignore it, something goes wrong. Sometimes my wife picks up on that stuff when I don't even notice it at all. And so that would be one of my pieces of advice, and that is don't ignore your gut. You were created with this built-in sensor radar that picks up on all kinds of things that your conscious brain doesn't know, whether it's the look in someone's eye, the way they stand, the way they hold their arms. There's all these things that your brain, I heard it was like 3,000 different things your brain can pick up on that you don't consciously know and couldn't explain to anybody, but in your heart of hearts. And don't ignore that. That's my first piece of advice in that regard.
And so, listeners out there, if this piques your interest, I would suggest you start reading today, because like you said earlier, best investment is the one in yourself, because you don't want to go blindly into anything. You always want to do your own research, and you never know who you meet. You never know the things that you can pick up from that.
Right.
So when it comes to what you're doing in your world, you had, on the last time we met, you had a book. Tell us about that book that you had last year.
Yeah, it's called The Perfect Investment, and it's my conclusion after studying that multifamily investing, commercial real estate investing is the perfect blend of opportunities, demographics, risk, return, stabilized, expected returns in the future. And so the book is called The Perfect Investment. And the problem with it is that lots and lots of people, a guy called me today and challenged me. He said, man, you're messing up your own investments. I said, why? He said, because your book's pretty popular. Lots of people are buying it and they're overpaying for apartments now. And because they're overpaying, they're actually driving the price up for all of us, and the investment's not perfect anymore. So I said, well, I really wish I was that powerful, and I wish my book was that popular. But I will say it is true that there are lots and lots of people who love apartment investing, and the problem with that is it has, as a whole, driven up the prices of apartments across the U.S., and it's hard to find good deals anywhere. And so that's what my book's about. Since the book, we've expanded. Our Wellings Capital funds have expanded into self-storage, into mobile home parks, And we're really excited about many of the opportunities we see in those areas, and we're investing heavily in those alongside multifamily. And that's how I told you earlier. We've calculated, and it's pretty easy to prove with math, that you can turn 100,000 into several million over the course of a long hold time with the right operator.
And that's the key word, time. Nothing comes anything worth value doesn't come overnight.
Right, that's very true.
So for our audience out there, to the young entrepreneurs out there who are not quite ready to make any major money moves with real estate, we talked about where they can learn from. They definitely can pick up your book. But outside of that, what words of wisdom will you give dreamers out there?
What was the question, Shemaya?
What words of wisdom would you give out to dreamers out there?
Wisdom. Okay.
Yeah, the young entrepreneurs out there.
Yeah, I would say if you got a heart to do something, find a mentor, find a coach. You might have to pay them, or you might have to work for free for them. But I would definitely find somebody and, link up with them, learn all you can. And that might start by going to your local real estate meetup. There's real estate investor associations all over the U.S., small towns, large cities. Go there, learn all you can. Link up with somebody who seems credible, or find a mentor online. My company and others do some mentoring, and it's there are things you can do to learn a lot through a mentoring program. And then learn all you can from them and go for it.
That's right, go for it. Thank you, Paul Moore, for being on this show, I Am Refocused podcast. If you, the listener, want to know more about Paul Moore, you can go to his website, wellingscapital.com. That's WELLINGS capital.com. And also check out his book, Perfect Investment. You can get that on Amazon. And also, Paul Moore is the co-host of How to Lose Money podcast. You can find that on iTunes. And once again, like we say on every single show, I Am Refocused podcast. Keep God first, stay focused, and peace.